Hi, welcome to Market Minute. This is where we analyze the markets looking for opportunities, but most importantly, protecting our downside where we think we need to. Did you see the 10-year Treasury popped right after the debate? Our thought behind that is that the market believes that Trump will likely get elected. Kind of hard to argue with that at this point, but he'll likely get elected and put in some policies that are very pro-growth and rekindle inflation. If the 10-year Treasury continues moving up, that's not good. So there's not a lot of leeway in the valuations of the market to allow the 10-year Treasury yield to rise very much. So we are watching the downside potential on the momentum stocks. There's lots of downside potential there. I want to show you a chart here in a second. And then energy, we talked about energy a couple times before on our weekly updates. We think it's starting to work out. So oil is starting to go up in price. We think that'll lead those stocks higher. So the technicals, the equal weight is up just 3.2 on the S&P 500, up just 3.2% year to date, versus the market weight up 14.5. That's a major divergence. So what's going on there? Obviously, it's some momentum names that are doing really well. So the question is, will we get a rotation in the market before a major correction will occur? We're thinking we get a rotation first. So the momentum stocks are up 35% year to date. So this is the Invesco S&P 500 momentum, up big time, right, year to date. And it contains obviously NVIDIA and a number of other high-tech companies that have done well. So what's a momentum stock? It's a stock that's going up because it's going up. So that's momentum. It's up almost 26% above the 200-day moving average. So that's a sell signal. Easy to spot. So this will come back down pretty significantly in our opinion in a not too distant future. So we missed this. We missed this big move in the momentum stocks. We thought the rest of the market would go up along with these stocks maybe, but not having this huge divergence between the two. So we're still thinking that we're going to get a rotation in the rest of the market. So the S&P 500, we're looking at a 10% decline. Maybe it comes all the way down here to the 200-day moving average, which will be a little bit more than that. Say another total of 12% decline as possible. First stop is about down 5%. That's about 52.50 on the S&P 500, and the next stop about 49.70 on the S&P 500. That's 10% drop. And then to test the 200-day, we would like it to test, maybe go below the 200-day, and then come back above the 200-day to give us a clear buy signal, and that's around the 48.70 level. So the stock market is overbought. Momentum stocks are way overbought. The rest of the market looks reasonably okay. The rest of the market is actually, besides technology and the energy stocks are now starting to move upward, are in a downtrend. So the rest of the market is not acting well, except maybe energy is the first one that's been a laggard to start moving back up again. So the 10-year Treasury yield moved up after the debate, and I think it's a signal that it believes that Trump's growth policies will likely cause some inflation and cause the 10-year or inflation to pick up to push the 10-year higher. So it's currently starting to break out here. If you see it, the yield itself went above the 200-day, above the 50-day, and it's kind of breaking through that trend line there. That's worrisome. So the current earnings yield of the S&P 500 is about 4.5%, and we're roughly 4.5% on the 10-year Treasury. So there's no risk premium at all to stocks at this point. Generally, when the risk premium is zero or negative, returns on stocks are very mediocre or potentially can be negative in a big way. So watch the 10-year Treasury closely. We're focused on the yield-oriented parts of the markets. So we like energy. There's good yields in energy, and dividend growers we like a lot. We like the healthcare space as well. And in small cap, we want to own some positions in small cap. It's hard to own small cap in a big way at this point, so we're being very strategic on what we buy there, being a sharpshooter, picking off the best ideas. We invested in Red Cat not too long ago. That's had a nice little move in that stock. They're a supplier of defense drones to the military. And then selectively in the healthcare space as well, in the biotech stocks, we think there's some big upside in some of those micro cap biotechnology stocks. As we discussed, we're being defensive. We think there's a correction coming. Energy looks attractive to us, and we want to own the higher quality dividend growers, generally speaking. Thanks a lot. Please hit like. Come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute. And I hope you have a great 4th of July.